Welcome to today's Finextra Research webinar, Redefining Global Transaction Banking with Account-to-Account and Cross-Border Payments. I'm Scott Hamilton, contributing editor for Finextra, and I'm here to lead a conversation on that topic and to explore important insights on it with you, our audience. But before we jump into that discussion with our experts today, I'd like to share a couple of housekeeping announcements. First, you're encouraged to ask questions, and we'll do all we can to answer as many as we can during the session. You'll also have a chance to weigh in on 2 audience polls during the session. And then finally, you'll find some links to helpful documents and sources provided by our sponsor, GridGain, available for you to download. Now, whether you call them account-to-account transfers or pay-by-bank, they're taking the world by storm. If you read the synopsis for this webinar, you know that A2A transfers, which move funds directly and in many cases instantly between persons, businesses, or from consumers to merchants, tend to avoid traditional BACS or ACH or SWIFT payment rails on a local basis. And they're projected to grow to a value of more than 15 times what they amounted to in 2023 by 2032. That's substantial growth, and it's being driven now and will continue to be by the fact that account-to-account transfers are faster, 24/7, real-time usually, secure and encrypted, no third parties necessary in the middle of the process. It's just you and your financial provider, full visibility at each transaction, and using your phone if you like. Beyond that, open banking via API connections to other institutions and digital wallets, even ISO 20022 standardization may unlock new possibilities, really a world beyond cards and other traditional transaction types. And then there are international payments, and that market is worth into the hundreds of trillions now and projected to keep growing at a 5% clip per year ongoing. These should not be as complicated or costly as they tend to be for people managing overseas needs or paying suppliers. Whether personal or business related, they can take longer to complete, sometimes several days longer, and they can have lots of hidden charges, especially for FX, and more if certain countries and currencies come into play. Not to mention, they can be tough to track sometimes, or for some, most of the time. Now, account-to-account transfers are quite possibly the first ideal solution to transform commerce so substantially in a very, very long time. Yet when you change behaviors, systems, and locales and speed up something that's slow or decrease costs and barriers to getting transactions executed more simply than before, there can be unfortunate consequences to those who aren't prepared for fraud, for example. Now, solutions are needed to keep the momentum going as these new borderless instant payments spread around the globe. Now, AI will surely play a role, and very importantly, people in compliance and operations, and of course, product teams. They'll need to work together to make sure that all the I's are dotted and the T's are crossed when account-to-account procedures are commercialized for customer use, and that they're ready to meet regional and global regulators' expectations. Now, stable coins and tokenized deposits, you've probably heard of, they'll have roles to play too, and not everyone is going to be happy about all of this. Legacy correspondent banks that don't or can't step up their game to match the new trends and transactions may see many of their presently profitable relationships fade away. These are the topics we'll be tackling today with our outstanding panel of experts. Oscar Herrera, Global Vice President of Field Technical Services for GridGain Systems, our sponsor. Zainab Sayan, Head of Partnerships Europe for Visa Direct. And Vijay Anand, Head of Digital One Product and Engineering, Payments and Banking Products for FIS. Oscar, why don't you start us off with an overview of the advantages and also some of the challenges of account-to-account or pay-by-bank transfers and other instant payments, relative especially to fraud prevention and security, and how their advantages are playing out in the marketplace in terms of speed and execution and data handling, and then different fraud detection models, especially for cross-border payments, and why this matters.
Thanks, Scott. So just to give a little background, so a few years ago, banks could afford minutes or hours to validate transactions and spot fraud. Today, it's come down to milliseconds. So customers tap their phones, a payment gateway receives the information, and then an account-to-account transfer between 2 continents fires off in less than time than it takes to blink. And somewhere in the middle, someone's always looking to intercept that transaction and make something and behave poorly with it. The benefits today is exactly that. we have the power of payments, whether it be local payments, interstate payments, across border payments, across continent payments, at the tip of our fingers. They sit in our cell phones, they sit on our browsers. With a click of a button, we must be able to initiate the transfer, validate the customer information, identify the customer, identify if there's fraud by doing fraud scoring, and basically figure out if it's an FX transaction, the best corridor and which rules are going to apply in order to execute that cross-border transaction. And all of this must be able to synchronize ledgers and account balances across different regions. And the challenge is this all now has to happen within 1 to 5 milliseconds. Faster than a blink of an eye, all these things must occur. So we now need to be able to create technology and have platforms that can do these things in a near real-time fashion. The challenges we face today is that most financial institutions are still running legacy systems that focused around a non-real-time, near real-time being hours to do transactions versus what customers expect today, which is instant transfers within the time it takes to reload your browser. So today, there's a lot of challenges, but I think the technology has begun to catch up both with different platforms and data fabrics that are out there, platforms that can do compute near the data, as close to the data as possible, as well as AI and ML, lending their hand in identifying and doing fraud scoring as transactions come through.
Thank you. That's an excellent overview to kind of get us started. And Zeynep, any thoughts you might add to Oscar's comments from your role working especially with partnerships for Visa Direct in Europe? And how well are account-to-account models integrating into banking and commerce now in the continent and elsewhere as well? And what are the biggest challenges you see to correspondent banking as we come into this merging payments environment?
Thank you, Scott. Like three of them are very great questions. So I totally agree with everything that Oscar mentioned. Maybe let me jump into the account-to-accounts, how it's integrated. So I would like to start by giving you some stats because the numbers are really staggering. So when we are talking about account-to-account markets, it's almost exploding. So going from 60 billion transactions today to over 885 billion transactions in 2029. So it's doubling. We are talking about 200% increase. And when we look at the cross-border payments, the very engine of global commerce, we are talking about 250 trillion USD in space. So it is massive. If you think about it, it's larger than GDP of some of the countries. So and A2A provides convenience, fast payments, transactions, low cost and secure traceable transactions. So you would think that A2A would be an easy win everywhere. But it's not really the reality. So the path to A2A integration looks completely different depending on where you are in the world. So for instance, if you are in a market like India or Thailand, the conditions were perfect. So they could leapfrog old payment system and go straight to the modern A2A because like the digital habits were still being formed and there were a very strong government backing. And basically the system quickly became the default. But in Europe, we don't see the same. So it's a very tough market. First of all, we are not starting from a blank page. And there's a very deeply embedded payment culture. So people are used to reliable cards and direct debits. And it's very difficult to change these habits. And historically, the market is fragmented as well. So I think the change will be triggered probably with the instant payment regulation in Europe, because this mandates that all the Eurozone banks must be able to receive instant payments. And I would think that that will be a huge catalyst for open banking and making pay by bank much more realistic and attractive option across Europe. And I would like to also mention, because you also asked in the previous question, like from my role in Visa, from Visa Direct perspective. So this is exactly, I think, where Visa adds value to the fragmentation, because our primary solution in this space is Visa Direct. And what it does, first of all, it uses our trusted global network to enable real-time payments. And it can be either to a card or directly to an account or a wallet. So it is across different payout channels. And also this gives businesses the speed of an A2A transfer with a simplicity, with a global reach and security of the Visa brands that clients, our consumers and merchants have trusted for decades. So I think that's probably the combination of unlocking the full potential of account-to-account payments. And coming back to your second question, which was the biggest challenges that I see on the correspondent banking in the emergent payment environment. So I think this is a very critical question, because the biggest challenges are actually obvious one, and it can be boiled down to three things: cost, speed, and clarity. And by clarity, I mean traceability of the transaction. So if we are being honest here, for decades, sending money across borders has been very slow, expensive, and definitely not a traceable and transparent process. So if you send money, it can sometimes take days to arrive. Usually you have no idea how it will cost because of the unpredictable fees of the intermediary banks. And also you don't really have a traceability, so you don't know when it will arrive. So it's almost like sending a package without a tracking number on it. So fintechs and A2A networks have completely exposed these weaknesses, so by offering faster, cheaper alternatives. And obviously, customer expectations have permanently shifted. So nowadays, everybody wants to have fast and transparent transactions. And as Visa, we do have visibility to both fintech world and the traditional bank world. So we recently made an analysis with one of the top consulting firms in the world, and we analyzed the data for retail segments, SMB, and large corporates. For retail, as of today, 70% of the transactions sits with fintechs. So if you think about it, banks lost a huge market share in this segment. And we do see a similar trend on SMBs at the moment. And I think in the near future, we will see a similar shift from traditional banks to the fintechs on the corporate segment as well. So obviously, banks themselves are feeling this pressure intensely. But the cost of compliance is increasing. There's a lot of regulatory requests, so especially for anti-money laundering checks that Oscar also mentioned. So, and also this starts to make like many of those old correspondent relationships simply unprofitable to maintain. And if you look in Europe, there has been 40% reduction in active correspondent banking relationships since 2011. So if you think about it, nearly half have vanished. So largely because of the regulatory pressure that I mentioned. Yeah, and that's why, like now, there is this alternative solution, and Visa Direct is one of them. Because instead of this complex, slow, unpredictable chain of banks, so with Visa Direct, it gives access to like single connection of a global network, and it replaces the fragmented system with a modern and unified one. And it also addresses the speed issue, because most of our transactions are real time or near real time. And majority on the account rails is, if it's not real time, is within 1 day. And as well as the traceability concern that I mentioned. So you are able to trace the transaction. You can see the status of the transaction in any time. So I think that's more or less it on my side. And so basically, it's about delivering the speed and convenience that the customers are currently demanding without the legacy baggage of old correspondent model is the new world.
Thank you very much, Zainab. I mean, there are some challenges definitely. And VJ, I just would get your comments on this. And if you're a bank or an FI of another type, what's most important for you in deploying the strategy to deal with some of these challenges for account to accounts, especially when you have multiple regulatory environments you're dealing with around the country? How are end users really going to measure and value any payment and fraud strategy and the choices involved?
I think it's a fascinating time for all the payment practitioners. We are indeed witnessing a paradigm shift where the strategy, technological, and regulatory collaboration is needed to really redefine how global transaction banking will move ahead. And what we are looking for, it is not just the speed, but the most important thing is how do we build trust and security in the system? Because fraud is definitely becoming one of the biggest challenge, which in the process of our innovation, the question for before us is simple: how do we safely unlock the full potential of instant borderless payment? And if you look at global transaction banking, it is being redefined, whether it is account-to-account transfer, instant payment rails, tokenized assets. These are definitely challenging the decades-old correspondent system. The reason question is why, because the point which we just discussed about speed, transparency, and trust, they are now non-negotiable. The old correspondent system, bank model is no longer working because it was making things unpredictable. At the number which we just heard, it speaks for themselves. We are talking about you just mentioned about account-to-account volume increasing 15-fold and cross-border flows to be touching somewhere around 290 trillion. So it really calls for ultimate convergence. And the challenge before the bank is how do they move and evolve from being just the owner of transaction rails to become the orchestrator of data and trust across all the rails. So if you look at the fundamentals, what exactly is expected from the payment? The payment for the end user, they are looking at to be super. So if you look at break the acronym, S stands for speed. They definitely want the payment to be fast. U stand for ubiquitous, because anywhere, anytime, they want to have the control with them. They want it to be powerful. They want it to have traceability. They want a lot of information to be there. They want it to be easy to operate. And R stands for reliability, resilience, where the payment really need to be very, very resilient, and they need to be absolutely sure when the payment is being made, it is going to the right recipient. So if you look at it, the future is not only about moving money faster. It's about moving trust at the speed of light. The questions which are being asked when the consumer can stream movies instantly, why we need this correspondent banking kind of model to move money across border, which will take several days, and where we do not really know where the payment is and what my FX rate would be. So if you look at it, what is the vision statement for the global transaction banking? Borderless interoperability, that is the most important one. The payment need to be instant, transparent, compliant across all jurisdiction. Trust needs to be embedded in the technology. So whatever we are doing, it should add trust. It should help bringing the trust in the entire ecosystem. Innovation has to be more human-centric. It should be embedded in the regular scheme of things or the work which the individual is doing. AI, we have to really leverage as the agility engine to bring predictive risk, make sure that we are more proactive, we are getting more insights. We can see AI really dynamically route payments. And last but not the least, tokenization. How exactly stablecoins is going to really make the whole settlement much more fast and bring trust to the system. So if you look at it, when we are talking about different jurisdiction, your A2A technology isn't designed to be locally compliant by default, the global strategy will fail. So there are several tenets for making sure that your payment is compliant and making sure it takes care of all the multi-local regulatory environment. The most important lever, which today is the universal data standard. ISO 20022 definitely it needs to be used so that we can use ML KYC easily in all the jurisdiction. We need interoperability so that all the modular systems can quickly adapt to the new changes, new regulatory changes which is coming on. The mapping and understanding of the payments, because as we are moving the payment to be borderless, you need to make sure that you understand the different regulations, whether it is PSD2, whether it is UPI, whether it is FedNow. You need to really understand the difference and make sure that your system is agile enough to handle different regulatory requirements, risk and fraud controls, because you definitely is something which is keeping all of us awake with so much of fraud volume increasing. I think the cybercrime is at its peak. We see APP fraud, synthetic fraud. There is phishing. There is so much of new kind of payment frauds we are seeing that it is something which we really need to bring trust in the system so that we can really be giving a very, very secure system for the users to operate. And with the kind of transaction volume we are talking about, we really need to make sure that the system needs to be designed for multi-currency, multi-rail routing. So the question in front of the bank is, if compliance is fragmented, how do you make trust seamless across border? That is where you really need to bring all these tenets together, make sure that we are able to build the trust, because at the end of the day, customer doesn't care about the rails. They care about the payment certainty, clarity, and control. So it is a time for all the ecosystem in the payments to come together and build the system. Because as you look at it, if you across the value chain, there are multiple players who are touching the payment, and everybody needs to take compliance and use the technology to prevent fraud and build the trust in the system for all the users.
Super answer, Vijay, to play on your acronym there. And it's a great time for us to jump in and get some thoughts from our audience. Let's go to our first poll, which is, how prepared do you feel as an organization regarding your current infrastructure to support these 24/7, 365 real-time payments? Are you fully ready, or partially early stages, or you haven't yet prioritized? Please take a moment to answer that question. We'll come back to it in a second here, in a little bit here. Oscar, any further thoughts on what you've heard and the current A2A and pay-by-bank landscape? What are some of maybe the less well-known opportunities for this new technology from a product and product development standpoint, and beyond traditional methods in financial services, where account-to-account payments starting to make their mark right now? Any key examples you can share?
Sure. We've got, at GridGain, we have quite a large customer base that has focused on doing exactly that, using the platform to bring the fraud processing, the analytics, the machine learning to the actual data versus the other way around. Traditionally, there's been a lot of data movement going around. So the traditional problem is, I have all this compute, I have all this, these AI ML models, I have fraud detection models and processing, and now the challenge is bringing the data to those models, and every hop adds latency, every hop adds different milliseconds, and every hop gives opportunities for bad actors to execute. What our customers have done is they've started using our platform to bring that processing as close to the data as possible. And in a lot of cases on the same compute node as the data resides on. by partitioning and distributing the data across many different compute nodes, financial services organizations, banks can then process that data where it lives. If you are a large multinational bank, you can have your data fabric spread across many different countries, many different continents. And what our platform allows us to do is move the specific regulations, compliance, GDPR policies to where the data lives versus having to move data in centralized databases to individual countries. So some of the new techniques out there is solving the data gravity problem, moving compute as close to the data as possible, and having the data and having that compute, that those processes have regional context. Compared to in the past, a lot of that information needed to be moved across the network and then applied during batch cycles at night. Now all this processing can occur at scale in real time, allowing you to handle millions of transactions per second across different regional contexts, across different continents, without having to move the data around, therefore not violating GDPR, therefore not violating privacy policies as you move country to country. So a lot of our customers have adopted that technology, that concept of moving processing to the data versus moving the data to the processing, to allow them to get to near real time fraud detection, risk analysis, FX rate calculating, all within a handful of milliseconds.
Novel approach, seems to make a whole lot of sense, and I want to thank you for that, Oscar. I'm kind of curious. Vijay, you gave us some pretty deep detail. We're going to show the results of our poll here, and first, maybe any thoughts you have on the results. Looks like right in the middle, partially ready. 50% of the people are partially ready, and we've got maybe a third who are fully. And then there's others who are in the early stages or not yet prioritized. Any surprises here?
I'll say no, to be honest, because I think the question is, it is just the foundation. A real-time payment rail is a foundation on which all the value-added services has to be built. It is like a foundation for driving innovation. You have to really look at how overlay services need to be built over it. And the question is whether we have really been able to extract all the potential. I think we still have a way to go. There are different geographies who are in different stages of maturity of leveraging this real-time payment rails. But the next stage is, how do we really make the payment completely borderless? We have seen some great example where UPI and Singapore payment, India, Singapore coming together as a corridor, which is taking away the intermediaries. Some of the fascinating stories of UPI or PIX talks about the huge potential where we can really be able to make the payment accessible to everyone. In India, we are talking about 20 billion transactions every month. That is a huge number, and we still see it growing. But the most important thing is making the payment accessible through very, very cheap QR code. Payment as less as 10 cents are being made through the QR. The question is, the volume is increasing, but it has been made accessible. So that is where I feel that we still have to really take the most important, you can say, secret sauce out of it, how to make it profitable to all the players. Whether we have been able to monetize the investment that is being made on real-time payment, I think we still have a way distance to cover. And that won't happen if we restrict it to only the retail payments. That is where B2B has a lot of potential, cross-border. There is so much of redundancy. There are so much of frictions in the system. There is so much expense being incurred on that. If we are able to build trust, that is a place where we will see a lot of exciting use cases. It is a hub for really making payment profitable for each of the players, whoever touches the transaction. Because
Yeah.
you are not going to make payment anymore by making payments. Nobody wants to pay for making payments. The question is, how do you use the data which is there to really give value to the user? And that is what the user expect today. They definitely want value and they want intelligence. If you are having my data, I want my system to tell me, my app to tell me, hey, whether this is the right rail for us. And that is where many of the banks are investing in the multi-rail strategy. In
That's where
fact,
AI can come in too, is right. You know, some of the agents that are involved here. By the way, we had some questions from the audience asking if, you know, how are we going to do this? I think we've just answered a lot of that, a lot of the, you know, the nuts and bolts questions. You're going to have to parse it out a little based on where you're working, but the agents you design, the way that they flow through your system, how they accommodate your compliance needs, fraud prevention, all of these things. This is kind of what we're talking about here, or it's exactly what we're talking about, what some of the audience are asking. If you don't mind, I'm going to switch to, and thank you for that. Appreciate it, Anand, or VJ. When we go to Zainab, there was one question from the audience you thought you might want to answer. Feel free, and then we'll move on.
Sure. I don't know which one because I actually answer all the question on my name, but there is a question about stable coins. If you want, maybe I can talk more about the stable coins here.
Well, we'll go into that in a bit. I think we'll go into that in a bit. There were some questions about the channels that are being used and so forth. You know, we're not focusing in here specifically on one company or their approach or whatever, but you know, the question is what kinds of channels and volumes. I'm sure they can get that from you offline, right? You know, and all those things we're talking about here, what kind of rails you use and so forth.
Yes, I already answered the question. One of the questions was about whether Visa Direct work in Europe and which rails it's used. There is a question specifically about SEPA Instant. Yes, as Visa Direct, we are connected to SEPA Instant, so we are using it, as well as our own rail network and the Swift connection.
Perfect. That's
and there
great.
is another, yeah. Mm-hmm.
Yeah, that's great. And one of the things we try to do here is connect people with the people who they can learn from. So afterwards, feel free to connect with any of our panelists. But it is a good time to talk about where stablecoins fit in. You know, what are, yeah, you know, what are some of the pain points that are coming up when you start talking about, you know, fraud? You and I spoke before this session about, you know, how fraud fits in, these new applications to old problems, and what, you know, recommendations that you can make or that you've seen work well for compliance and enhancing fraud protection that you can share.
Sure. I'll start with the stablecoin one because also there was a question from the audience. So first of all, I really find stablecoins a fascinating and potentially transformative one, because I think the easiest way to think about stablecoins is like a new set of payment rails that is global right out of the box, and they promise to deliver exactly what the old system struggles with. So it's near instant and 24/7 settlement and really significantly low fees. And where we see the adaptation the most at the moment, mainly in the emergent markets, because they are like almost powerful living labs for this kind of payment innovation, and for the reasons that we know, mostly currency volatility, high mobile phone adaptation, and reliance on remittances are main drivers of this change. And as we discussed, like stablecoins are filling the gaps that the legacy financial systems can't. And I think the real question here, so how does a legacy system will interact with this new digital world? Because it's separate at the moment. And as Visa and the players like Visa are building these critical bridges. So at the moment, we are piloting in two different ways. The first one is on the settlement side, on the pre-funding. So historically, our partners used to settle with Visa via traditional wire transfers. So now we are providing them the option, the flexibility to pre-fund using stable coins. And So the main difference is that, the traditional one used only works during banking hours, and sometimes it's slow depending on when the transaction is triggered. But with this pre-funding option via stablecoins, so now they can use stablecoins like USDC and then settle with Visa in real time and whenever they want. So this is really they changed the game of our back end, and also it makes settlements faster and more efficient and in 24/7. And the second part is more about the consumer experience, because if the stable coins are the new rails, and people need a simple and trusted way to get off those rails and back into the currency that they spend every day. So that is the payout piece that I mentioned, which is also powered by Visa Direct within Visa. So we are now piloting with Visa Direct payouts to stablecoin wallets. So basically, businesses think about a global platform or marketplaces to pay their workers or creators or their users with a new with a new way in stablecoins. So if you think about it all together, stablecoins is not a new model replacing the other. So I think the key here is to have a multi-rail and interoperable ecosystem, so that we can ensure that the whole digital ecosystem works for everyone and based on their needs. And the second question that you asked me is about the pain points that I'm seeing in the real world and about the fraud standpoints. So fraud is definitely a critical topic and probably the most important conversation in payments right now. And Oscar and as well as Vijay mentioned about it as well. So while we move to the instant payments, and which is great and incredible, it offers incredible convenience, something that we are enabling services like Visa Direct or other alternative providers, but it also opens the door to new vulnerabilities. And the biggest pain point we see today, by far, is the explosion of authorized push payment fraud, APP fraud. So this isn't like a classic card fraud that we used to, where the criminal steals your details. So this is really different. And this is even a little bit, if I may, like psychologically damaging, because it's when a scammer tricks you into personally sending them money. And because you, like as the victim, authorize the payment, so the transactions are instant and most of the time irreversible. And it really causes a huge losses from a consumer perspective. So just to give you an idea of the scale, in UK alone, APP fraud losses were around £500 million last year. So we are talking about massive loss here. And the good news is, like Visa and other companies are developing powerful ways to fight back. And I think, like as Visa, what we think is, if we provide a fast payment rail, it's also our responsibility to make it secure. So this is why, like one of the solutions that Visa introduced to the ecosystem is Visa Protect for account-to-account payments. So the idea is simple, to be honest. So we use data and AI similar to other providers. But what Visa brings to the equation is that what individuals bank cannot see alone, because we have the power of the network. So if you think about it, a single bank can only seize a payment from their customers to another account. So they have no idea if the receiver account has been part of a scam campaign or also hit by 5 other banks in the last hour, like things like that. So, but at Visa, we can see this. So we are able to analyze billions of transactions across the globe, and we can identify such suspicious patterns and signals. And we are basically connecting dots across the ecosystem. So, so it's not just one bank data, but it's a multiple bank and the network data. So we are using the power of the network. And we do have an incredible proof that works with pay.uk. So we did work with them, and our solution successfully detected 54% of fraudulent transactions that had been cleared by banks. And think about it, banks really have sophisticated detection system. So it's a really like massive win on our side, because we caught more than half of the fraud that was getting through. So I think this is a testament to the power of the network level view.
So progress is being made. We're solving some of these pain points, especially when it comes to fraud. And I want to thank you, Zeynep, for sharing those examples, because we've had some questions from the audience on examples. I think you've given some good ones there for both stablecoins and also for instant payments in general, and how the compliance is being dealt with. Oscar, before we run our next poll, any quick questions or thoughts you have on the first poll results? Any surprises there? And then we'll ask you a quick question.
No, not at all.
Okay,
no,
good.
Not at all. This is typical to what we see at our customers today. A lot of people know they need to get there. They haven't quite figured out how they're going to solve some of these problems, and that's why they're coming to us. But no, this is about spot on to where we are with our customer base.
So how do you actually get out there and get things started? How do you, how do you get these organizations to build and maintain momentum, with their staff, make these upgrades really work? And how can FIs actually measure their performance against these, against these goals? How do they know they're making progress?
I think Zendaya hit it spot on, right? It's about catching fraud, reducing that fraud count, identifying recurring patterns, and being able to train their models, their fraud models and risk models on those patterns in real time. So I keep going back to this. It really is about real-time processing, not just of the payment, but of the fraud detection. It's making sure that you've got both analytical processing and transaction processing at the same time on the same data. And that way, as you begin to do those things, you begin to create trust. We talk about trust, build trust in both the transaction, in the process flow, in the validity of the data. It's about building that trust and creating security for both sides of the account-to-account transfer. So how do our customers begin? They start looking at their existing platforms and start moving. We give customers the ability to move different pieces one at a time into a new platform, so that these are not wholesale rewrites of existing payment platforms. They're 8, 10, 12, 36-month transformations, moving off of legacy platforms onto these newer platforms, into newer data fabrics that solve data gravity problems, rethinking the way they handle scale. Because as was mentioned, we're not talking about how many transactions, how many hundreds of thousands of transactions can you do in an 8-hour day. We're 24/7. How many millions of tens of millions of transactions can you do in a 7/24 period? So your platforms have to scale, and it can be an overwhelming task.
But you've just explained how it can be done, which I think is really important. That upgrade path has to be achievable, and taking it piece by piece, making it flexible. I think, and we've got our next poll up, so audience, feel free to answer. Meanwhile, I got one last question for you, Oscar, before we move on to Vijay. Any regulatory challenges or blind spots you've seen, examples you can share with the audience?
So, it really, the EU started this going back a while back ago, right? It was about keeping data where the owner lives. GDPR continues to be a challenge for customers. Moving data cross-border continues to be challenging for customers. India last year enacted very similar GDPR rules, very similar rules to what GDPR did in Europe many years ago now. And we're beginning to see more and more countries implementing those types of rules. So for us, our ability to localize processing associated with that rule set helps our customers kind of overcome some of those challenges. You can have a single platform have rule processing in India, in Europe, in the UK, in the US, in North America, all within one data fabric, all talking to each other, but never sharing that data. So we can isolate and localize processing and data at the same time.
So this is a complex problem with solutions that are available that certainly can be put together. It's probably not going to help if you have a legacy system that is really, really inflexible, as both Vijay and Zeynep have also pointed out. As we move to our results on our poll, we'll go to Vijay. Vijay, you get another chance to weigh in right away. What do you think in terms of organizations' biggest challenge in modernizing systems? And it looks like it's managing real-time fraud and compliance checks. No big surprise there. But also that integrating with the legacy systems. They played right into what I was talking about. But of course, the regulatory mandates throughout Europe and elsewhere in the world as well are going to have a play too. Now, one thing I would say about ISO may end up helping, even though it's taking emphasis and time away, it may end up helping in the end. Vijay, best practices, cautions you've got from what you've seen so that companies can make the right choices and choose their priorities when they're upgrading their systems. And anything you can share on AI specifically, how it's going to help them both manage now and future-proof their systems in the future.
I think the most important thing is the sponsorship and having a clear vision. What do you want to really do? If there is a regulation, you take example of ISO 20022. You just want to be compliant, or you really want to take full advantage of it? Because ISO 20022 is all about having so much of information. It is data rich. But if all your upstream and downstream, your core banking system, your investigation system, your sanction is not able to really take take advantage of the data which you are having, if they are not really modernized, then you're just doing a tick mark. So the most important thing is how do you want to really progress? And that is where there are, it has to be a difference between being strategic and tactical. Yes, many of the banks, if you look at open banking, have they taken really the might of what open banking can do? I don't think so. Still, we are struggling to really monetize all the new use cases. And the reason is all the system we have not been able to modernize. So in order for us to really look at how to modernize it, it is all about design. How do you really think about your services? How do you clear and make sure you are nimble and easy to integrate? Microservices driven architecture, API based, how easily people can really consume your data and how you can integrate, how you can expose your services. Because today, if you have to be in the ecosystem, any partner can be a competitor. There are different ways you have to really play. I think we just heard about Visa A2A Protect. We have MasterCard having its own decision intelligence. The idea is, unless all the parties come together and collaborate, we are going to struggle to really compete with the threat of fraud, because with the real-time payment coming in, with the help of blockchain, the payment disappear in seconds. It is you just cannot trace it. So the important thing is how easily you can really share the data, whether it is about using things like confirmation of pay is a great example. How do you share the data together? So in order for any organization to successfully modernize, they need to have a very clear mandate and a roadmap. It is a mindset change. where you really need to look at and break your entire system into different services, make sure that it is nimble, it can integrate, and it is ready for the changes because regulations are changing. And with the new rails coming in, you have to be prepared because if every innovation will become a challenge for you. So unless you are able to really accept the change, whether it is coming from the technology, whether it is coming from the regulation, whether it is coming from some of the new uh, global handshaking, you have to be prepared. And that is, I feel that whichever organization have a very clear roadmap, they have blueprinted their capabilities and they have laid down the foundation. And it has to be across all the layers. Your
Yeah.
data layer need to be very clearly defined how you want to leverage the data, your messaging layer, your integration layer, and of course, you have to see how the system is scalable. Yeah, resiliency is definitely something which you cannot compromise on. And the most important thing is how do you use the identity management? Because in order for us to be very, very sure and the payment to be secure, you really need to make sure that you have the right kind of protection built in your system. So design it right, make sure that what you are designing, it works, and you have a future forward because view of the industry, you need to really think through. You cannot be really just catching up with the
Can't be living
changes.
in the past. Can't be trying to catch up. You got to
Yeah,
have it right from the start. You know,
no,
this is.
absolutely.
Oh,
I think one you need to have something bold, right? I think one very very interesting you can say update which is there is on the Finternet vision, because it is a bold vision. It is not only a single product. It is a fundamental shift in architecture, which built an open protocol and collaboration between the public and private sector, where all the digital assets would be put together. And that is the might of the tokenization. So if you really want to uh, make the most of the technology advancement, you have to really think, you need to have a very clear vision of where you are headed. The organization need to have a single view sponsorship, and there has to be a single vision across all. You cannot have today organizations work in silos. Your core banking doesn't talk
yes.
to the different system. How do you integrate and make sure that there is only one view, that is the consumer? All your customers get value of out of what you are doing, because one group cannot be successful if others are not.
You know, it's funny you just mentioned silos. That was going to be another question we're going to ask, but it actually plays into our final question, which I want to run by each one of you and just take a minute from each one of you to answer because it ties into what you just said. How do you develop these internal champions? And these internal champions are the ones who actually make sure that you do address all the elements you mentioned, that you have a plan and you follow through for your needs. Not every institution or organization is the same. There's no doubt about it. So the question really is, what would you prioritize right now regarding putting these account-to-account payments with AI, with the fraud protection you need, with cross-border implications? You know, if you're going to choose one thing that you're going to do right from the beginning, that key ingredient, I just need a short answer from you, Vijay. What would that be?
I think security, payment security, because the speed without security is chaos. Just like innovation without compliance is fragility. You really need to make sure speed is important, but you cannot compromise on the payment security. If the trust is broken of the end user, whatever innovation you are bringing in, it will never see the adoption. The reason why Visa works, the reason why MasterCard works, because there is trust.
Yeah.
The banks and the payment network bring in trust, which is helping the entire financial services ecosystem. And that is the trust which is expected from each of the players, whoever is touching the payment transaction.
Thank you. And by the way, that was the very first word you ever mentioned, I think, was trust. Definitely in between you and I. And Zainab, from your perspective, what key ingredient, what would you prioritize right now if you're trying to make sure you're ready in an organization?
I think I would almost repeat Vijay, because I also believe that like without trust, nothing will work. And as Visa, as he also mentioned, like trust, Visa is one of the most trusted brand in the world. I think it was ranked 6th. I didn't check the last year, but I believe it is still within the top 10. So that's why like we need to emphasize on the security of the transaction. We are already, like, I think, improved a lot the speed. So on the card rails, everything is real time. On wallets, everything is real time. And on the account, we are improving the percentage of the network where we are able to provide in real time transaction. But everything needs to be layered by security and non-fraudulent transaction. So I would almost repeat the same thing.
Awesome. Well, thank you for that. And Oscar, you get to take us home here. Your thoughts? What's the key ingredient, the key priority?
I would echo my colleague's statement. I think security is front and center for everyone, but what I would also add would be resiliency. Whatever platforms we're moving to have to stay up and running at whatever scale they need to. Right? We can no longer, we are in a 7x24, 365 payment world, real-time world. Systems have to stay up. There's no time for downtime. There's no time for taking systems down for upgrade. Every moment, every second, every hour that something is down gives a bad actor an opportunity to compromise a transaction, a system, a payer, a customer. So I would add, in addition to security and trust, it would be resiliency, up and running all the time, 7x24, 365.
And what a change that is from the days of yore. We haven't talked much about correspondent since the very beginning. And, you know, either they're going to adapt and become very valuable to their partners or they won't. And you know, that's a challenge for them as well. The last thing I would say is that, I mean, if I'm a financial institution or a payment systems provider or anybody involved in this chain, there is so much involved. We've given you, our audience, our experts here have given our audience some great ideas on where to get started. I'm sure that they can share further use cases and particular approaches that might work for you. So feel free to get in touch with them. And I do want to thank, just fantastic job from Oscar Herrera, Global Vice President for GridGain Systems, Zainab Sayen, Head of Partnerships, Europe, Visa Direct, and then also Vijay Anand, Head of Digital One, Product and Engineering and Payments for FIS. I want to thank our audience for weighing in today on our polls, even though it isn't really a surprise. Hopefully you all had a chance to see how others thought. You also saw the questions asked. And I would say that this will be available, should you like to share it with one of your colleagues on replay. This video will be available on replay. With that, I'll say thank you very much for coming to participating in our Finextra webinar, and hope you can join us for another one sometime soon. Oh, and if you'd like to download those resources from GridGain, they're also available for you in your invite. Thanks again, everyone. Have a great day. Thanks to the panel, and have a great rest of your week.
Thanks.
Thank you.